Everyone's talking about Bitcoin like it's the final boss of crypto. But what if the real money of this bull run isn't in Bitcoin at all? Ethereum is getting ready to flip the script. I'll show you why it could overtake Bitcoin sooner than anyone expects, and how getting in early could make you seriously rich. Let's start with the big picture. Ethereum has been outpacing Bitcoin in returns lately. Take July 2025 for example. Ether surged around 60%, while Bitcoin rose only 10 to 11%. That's a huge performance gap. Ethereum climbed from about $2,400 to nearly $4,000 in just 1 month. Its strongest showing in a long time. Kind of like your ex texting you at 2 a.m. You know something's wild about to happen. Bitcoin also went up from roughly 108,000 to 120,000, but that move was far from modest. By the end of July, Bitcoin's market dominance, which is its share of the total market cap, started to dip. At the same time, more money flowed into Ethereum and other altcoins, suggesting a shift in momentum. Now historically, Bitcoin leads the early part of a bull run, but as the rally matures, investors often rotate into Ethereum and alts, looking for higher returns. In July alone, Ethereum's market cap jumped by roughly $150 billion. It's still trailing Bitcoin by a wide margin, but that gap narrowed. This shift in attention is largely about timing and investor psychology. In the early stages of a bull run, investors favor Bitcoin because it's the safe crypto. But once Bitcoin has made gains, people look for what's next, and that's usually Ethereum. It's like Bitcoin gets the rally started, and Ethereum picks up the baton and runs even faster. By mid-August, Bitcoin's dominance had fallen from around 65% in late June to about 61%. Meanwhile, Ethereum's share of the market crept up to 13 to 14%. That might not sound huge, but in a $1 trillion market, it's billions moving into ETH. This kind of shift typically signals the start of an altcoin season, where coins like Ethereum start outperforming Bitcoin in percentage returns. Altcoin season is like crypto's version of spring break. Everyone's feeling bold, nobody's sleeping, and at some point, someone ends up crying. The sentiment reflects this too. In late July, the fear and greed index hit greed territory. That's usually a sign that risk appetite is returning. What's interesting is the rotation behavior. Investors were taking some profits from Bitcoin and rolling them into Ethereum and other altcoins. It's not reckless FOMO, it's strategic, and Ethereum is right at the center of that pivot. And if you think all this is interesting, just wait, because near the end of this video, I'm getting to the juicy stuff, the price predictions. How high could Ethereum actually go this bull run? Stick around, you don't want to miss this. A major reason for Ethereum's momentum is institutional money. Just a few years ago, most institutions were only buying Bitcoin. Now that Ethereum ETFs are live in the US, everything has changed. In 1 week in late July 2025, 9 Ethereum ETFs saw around $1.8 billion in inflows, while Bitcoin ETFs pulled in just $70 million, and even some outflows. That's a complete reversal from past trends. Ethereum is now leading ETF inflows across the board. Asset managers reported a 16-day streak of net inflows into ETH funds, while Bitcoin funds had redemptions. The shift is clear. Institutions that got comfortable with Bitcoin are now diversifying into Ethereum. As Rick Edelman, a well-known investment advisor, put it, a lot of these firms already own Bitcoin and are now adding ETH. It's also a self-reinforcing loop. As Ethereum's price started rising faster, more funds and momentum traders jumped in, which pushed the price even higher. In July, ETH ETFs brought in over $5.4 billion, a record month. Altogether, US spot ETH ETFs now manage around $27.6 billion. That's nearly 5% of the entire ETH supply locked up by institutions. BlackRock's iShares Ethereum Trust has become the biggest player in the space. It pulled in $1.29 billion in just 1 week. That's not retail hype. That's serious capital flowing in fast. When BlackRock shows up with billions, it's like your quiet uncle suddenly dropping bars at karaoke. Nobody saw it coming, but you respect it. These massive inflows aren't just pushing ETH's price up. They're also giving Ethereum the same kind of institutional credibility Bitcoin has enjoyed for years. It's no longer just a techie coin for developers. It's becoming a real asset class in the eyes of Wall Street. Quick question for you. Do you think Ethereum will outperform Bitcoin this bull run in terms of their percentage gains? Drop your prediction in the comments. I'd love to see where everyone stands. Now myself, I definitely believe Ethereum will outperform Bitcoin for the rest of the bull run. About a month ago, one of my real estate colleagues asked me what I thought was the best place to invest right now. A few years ago, I probably would have said real estate without hesitation. But my mindset has definitely shifted. I told him, if I were you, I'd buy Ethereum. Why? Because it's the biggest crypto asset that still has serious upside. Unlike Bitcoin, which is already huge, ETH has potential to double from here. That shift in thinking from real estate to crypto isn't just mine. It's happening across the board as more investors realize where the real growth might be this cycle. Now let's talk about whale behavior. You know, the big money wallets that can move the market. On-chain data shows some whales have been rotating from Bitcoin into Ethereum. That's a pretty strong vote of confidence. Some long-time Bitcoin holders have been taking profits and shifting their capital into ETH. One example is a whale who hadn't touched their Bitcoin since 2013, but they ended up moving 400 Bitcoin, which is around $45 million, and used it to buy nearly 12,000 ETH. In another case, a whale dumped 550 Bitcoin, worth about $62 million, which briefly dropped Bitcoin's price by 2%. That same whale then opened a $99 million long position on Ethereum. This kind of behavior is not random. These aren't small retail bets. When whales start exiting Bitcoin and entering Ethereum in large amounts like this, it's often because they believe ETH has more upside potential at this stage of the cycle. Beyond trading activity and price action, Ethereum's fundamentals are stronger than ever. Ethereum isn't just a coin. It's a full-blown platform powering DeFi, NFTs, smart contracts, gaming, stablecoins, and more. In 2025, Ethereum implemented a major upgrade, EIP 4844, also known as Proto-Dank sharding. This upgrade drastically reduced costs for Layer 2 solutions like Arbitrum and Optimism by more than 50%. That means faster, cheaper transactions across the board. Layer 2s are now handling over 60% of all Ethereum activity. The network is scaling efficiently without sacrificing security or decentralization. Daily transaction volumes on Ethereum are over 1 million per day, and most of those are smart contract interactions, not just simple transfers. All of this points to Ethereum being the core infrastructure for Web3. Bitcoin, on the other hand, is mostly a store of value. That's great for long-term holding, but it doesn't generate usage like Ethereum does. Ethereum is evolving like a tech platform. It gets upgrades, it earns yield, and it drives real utility. That's also why regulators and governments are taking Ethereum seriously. In the US, the SEC has recently signaled that Ethereum is not a security, which removes a major cloud of uncertainty. Clearer rules have opened the door for more institutional adoption. That's a big deal, because if something is labeled as security, like a stock, it faces strict regulations, expensive compliance rules, and the constant risk of lawsuits if it isn't registered properly. By saying Ethereum isn't a security, regulators are basically confirming it's more like a commodity or a digital asset, similar to gold. That makes institutions feel much safer investing in it because it means they won't get into legal trouble for holding or offering Ethereum to its clients. If you're finding this video helpful, tap that like button. It tells me you're into this kind of content and helps me know to make more videos just like it. Now in July, the US passed the Genius Act, giving legal clarity to stablecoins. And guess which chain processes 60% of stablecoin volume? Ethereum. Even Bitcoin's recent win being approved for 401k retirement accounts is good news for ETH. Once institutional money starts flowing into crypto through Bitcoin, Ethereum is often the next stop. With all of this in mind, strong recent performance, growing institutional adoption, whale rotation, and improved fundamentals, what kind of returns could Ethereum deliver? Nobody can predict prices perfectly, but some analysts have made bold forecasts. Standard Chartered, a major global bank, recently said Bitcoin could hit $175,000 to $250,000 by the end of 2025. That's around a 1.5x to 2x return from its mid-2025 levels. And if you want to know my realistic price targets for other major cryptos like Solana, XRP, or even some hidden gems, make sure you're ready for my next video. Hit that subscribe button so you don't miss it when it drops. But there are still some out there that still think Ethereum could hit $15,000 if current trends continue. That would be a 3 to 4x gain from ETH's current price. In mid-August, ETH had already jumped to about $4,700 after gaining over 50% in July alone. So if Bitcoin doubles and Ethereum triples, ETH would be the better performer in terms of percentage return, even though Bitcoin is still worth more per coin. That's the whole point of this video. Ethereum doesn't have to beat Bitcoin in price or market cap, it just has to grow faster, which is what it's already doing. Now honestly, I haven't rotated any of my Bitcoin into Ethereum, even though I probably should. Last bull run, I held on to my crypto too long and didn't take profits when I should have, and that burned me. So this time around, I'm playing it safer. I've only been selling some Bitcoin for cash as it goes up. I'm trying to protect my gains instead of always chasing the next move. You see, that's the thing about crypto. It isn't just about logic or math. It's also about timing, emotions, and learning from your past mistakes. Of course, there are some crypto diehards that threw out predictions like $20,000 ETH. Those are fun to imagine, but let's be realistic. Even hitting 12 to 15,000 would be massive. And there's growing evidence it is possible. Why? Because Ethereum is smaller than Bitcoin, so it has more room to run. Their tech is improving, institutional money is flooding in, on-chain data shows confidence, and the macro environment. Lower inflation, possible Fed rate cuts, and rising liquidity for risk assets like crypto. Bitcoin is still the heavyweight champ, no doubt, but Ethereum is the agile contender with a lot of momentum. That's why some of the biggest players are betting that ETH will deliver better returns in this phase of the bull run. Now, none of this is financial advice, of course. Crypto is volatile. Things can change fast. But the trend is clear. Ethereum has a strong case to outperform Bitcoin in gains over the next several months. If you're a beginner trying to understand where the upside is, here's the simple version. Bitcoin might still be the safest crypto bet, but Ethereum might be the most profitable one right now. So yeah, if I had to pick the safest way to double my money today, it'll be Ethereum. But if you're aiming for bigger gains and don't mind taking on a little more risk, click right here and watch my top 5 altcoin picks for this year. These are the ones with real 3x or even 10x potential, so don't miss it.